How will the Fed's rate hike affect the real estate market? Hi, Diana here with your monthly real estate market update. The big news this month are the growing concerns about inflation. Fed Chief Jerome Powell says it's absolutely essential to restore price stability. With that, the Fed raised rates today, May 4th, by 50 basis points. Fannie Mae is predicting a recession by next year due to the need for aggressive monetary policies to control inflation. But it says it will probably be a moderate recession and not like the Great Recession of 2008. It expects the strength of the housing market to help cushion the blow, although the mortgage financing giant also expects the housing market to slow down somewhat due to high home prices and mortgage rates. The National Association of Realtors is predicting a 10% decrease in home sales for this year. Home builders are increasing the number of homes they are starting despite rising inflation, higher mortgage rates, and labor shortage. But they're shifting their focus because of those issues from single family homes to multifamilies. The Census Board says that home starts were up 0.3% in March. Permits were also 0.4% higher. Homebuilder confidence is lower, however, because of rising mortgage rates and all of the other things making new homes so much more expensive. The National Association of Home Builders says its monthly confidence index was down 2 points in April to a reading of 77, even though it's hovering near its lowest level since last September. Anything over 50 is considered positive. Existing home sales were lower for a second month in a row. The National Association of Realtors says they were down 2.7% in March to a seasonally adjusted annual rate of 5.77 million. If you compare sales to March of 2021, they were down 4.5%. Mortgage rates are now over 5%. Freddie Mac says the average 30-year fixed mortgage was up 11 points last week to 5.11%. The 15-year was up 21 points to 4.38%. We are seeing three new trends already emerging. Number one, rapidly rising rates mean affordability has taken a hit for the year. The purchasing power for buyers has eroded in a short period of time. For example, how much more is the payment on a $650,000 home? At 3.31% with 10% down, the payment would be $2,565 per month versus $3,140 per month at 5% today. That is an additional $575 per month. Persistent higher rates will eventually diminish demand and ultimately throttle back the housing market. Number two, significantly fewer homes are being placed on the market this year compared to the average prior to COVID. Last year, there were 4,154 missing for sale signs in Riverside County, compared to the 3-year average between 2017 and 2019, 8% less. Through the first 3 months of 2022, there were 1,948 missing for sale signs, down 15%. So many homeowners who purchased several years back have refinanced to below 3%, and they've realized substantial appreciation, and they're just deciding to stay put. Number three, demand, which is a snapshot of the number of new escrows over the prior month, has been substantially muted this year. The 3-year average rise in demand prior to COVID was 1,334, or 53% higher than today. Last year's demand reading was 15% higher than today. A big reason for this is the lack of homes available to purchase. You can't buy what's not for sale. Over time, if mortgage rates persist at these higher levels with duration, then demand will continue to remain muted compared to prior years, even with more homes coming on the market. It's important to note that the strongest demographic patch of first-time homebuyers ever, the millennials, is making its way through the real estate market right now. The surge of prime first-time homebuyers aged 32 years old occurs between 2020 and 2024. That demographic was added on top of an increase in buyer activity during COVID, thanks to record low mortgage rates. Those record rates are gone, but there are still an astonishing number of millennials contributing to demand. Check out the links in the description for all of the data. If you have questions about the real estate market, please give me a call. I love to talk about the real estate market. If you or anyone you know are interested in selling, buying, or investing in real estate, please give us a call. We're happy to help.